Hey everybody, a lot of people asked me to do a new video on Seritage Growth Properties. Ticker symbol is SRG. I want to revisit the stock. It's down a lot since last time I talked about it. It's still in its process of winding down all of its assets, and it looks like it could be a great value with a big asterisk here. So before we dive in, please take a minute and check out the link you see on your screen, fool.com/Frankel, and hit the subscribe button to my channel while you're at it. That link will give you can get an offer from the Motley Fool, my sponsor. You get the top 10 stocks to buy right now. Best way to support this work I'm doing on YouTube. Again, fool.com/Frankel. All right, so let's dive right into Seritage. Just the quick 30-second rundown of what this is. Seritage Growth Properties, they're a real estate investment trust. They were spun out from Sears, if you remember Sears, the department store, to own a bunch of its old real estate assets and gradually convert them into new modern real estate that could then be leased out to new tenants. Now, then the COVID pandemic happened when they were in the middle of this plan. It's a portfolio of mostly vacant assets because remember, they were occupied by Sears. So unlike most real estate companies, they weren't bringing in any rental income. They have a lot of construction costs to do this. And long story short, the plan really didn't work out. The company ultimately decided that the best way to create value for shareholders, this was in late 2022, would be to completely liquidate, sell all of its assets, pay off its debts, and whatever's left, give it back to investors. So that's where we are now. They're about a year and a half into this liquidation plan. Um, Again, the stock is down about 50% since last time I talked about it. So let's take a look at how the company is doing now. So the asset sales have proceeded pretty nicely. So let me share this real quick. All right, so this is Seritage's latest earnings report. So I just kind of want to highlight a few key things. We're going to do a kind of sum of the parts analysis, see how much of a discount the stock is trading for right now. But first, you need to know a few key numbers. So Seritage, as of August 14th, which is when this earnings report came out, the company had 5 assets under contract for total expected proceeds of $138.6 million. That's number one. Number two, the company has accepted offers on, but is still negotiating on another $13.8 million of its assets. Now, number three, Seritage has cash on hand of $100.5 million right now. That includes some restricted cash, but this is at the end of the quarter. So the company had cash on hand as of August 13th of $87.2 million. So it's got a good bit of cash on hand. So another key thing to know, and this is the last number from this report, is that the current balance on its term loan facility, so the company's total debt, is $280 million. And it owes that to Berkshire Hathaway. Berkshire Hathaway is its creditor. So those are the numbers that we know how much it has currently under contract for sale, how much it still owes its creditors, and it still has a portfolio of real estate assets. And what Seritage does is it provides an estimate of what it thinks it's going to get for these remaining assets. So, for example, it has one multi-tenant asset that it thinks is going to sell between $25 and $30 million. It has this whole list of assets, all the way up to one asset that it thinks is worth between $150 and $200 million, and so on and so on. It does this for its entire portfolio that is remaining. So without further delay, let me go into the sum of the parts analysis here. And so the key thing is we'll calculate this, and then we'll go into what you need to know, because this is not just easy money. If anyone could buy a stock and make a quick double as a company sells some assets, we would all be doing it. So those are the numbers I was telling you about right here. $138.6 million of assets under contract to sell, another $13.8 million in active negotiations but already agreed on prices, $100.5 million of cash on hand, and $670 million of assets at the midpoint, according to those valuation ranges I just showed you. I just used the midpoint. That's not conservative, not particularly aggressive, but based on the midpoint of the valuation case that Seritage itself presented, so take that with a grain of salt, the company should get $670 million for its remaining assets. Now, it has $280 million worth of debt. So if I add all 4 of these numbers on the top, and then subtract the debt, you get a net asset value, theoretically, of $642.9 million. divide that by the total number of shares outstanding of 56.268 million shares, and you get a theoretical, again, theoretical being the key word, net asset value of $11.43 a share. Now, here's why everyone's so interested in this stock. Net asset value per share of 11.43. The current stock price is about $4.50 as I'm recording this. That implies upside of 154% as the asset sales completely wind down. But like I said, if you could buy a $4.50 stock and know that you're eventually going to get 11.43 for your shares, which the wind down should be completed within the next couple of years, hopefully. Everybody would do that. That's a phenomenal return. There's a few things to know. So number one, this makes a lot of assumptions about Seritage's ability to monetize its assets. Remember, these valuations have been revised downward already. That's the reason the stock is down 50% from last time I talked about it. The company said we were a little too aggressive in our valuations. We're not going to get that in the current interest rate and real estate environment. So they've already revised these down at least once. So it also makes assumptions they'll be able to sell these in a timely manner, that all of the eventual sale prices are going to be in these ranges. It also excludes any kind of transaction costs, it's worth noting. Generally, when you sell a house, you have to pay commission to the broker, and it's no exception in commercial real estate. The complete wind down process could take years. The company is still keeping its options open for the potential of a strategic transaction, which would essentially mean an all-in-one sale of the entire remaining portfolio. If it were to do that, it might be willing to offer a potential buyer a discount, which to just take everything all at once. So it might not get what it thinks it's going to get. And for the moment, it's still kind of burning through some cash. So if this takes years, Seritage is spending money. Just a quick example, in the second quarter, the company brought in $4.2 million of revenue from rental income, and its expenses during the quarter were $13.5 million. It's gradually spending its cash. You don't want this to take 3 or 4 years, because that's just like whittling away. It's like if you had a bank account you never used that was charging you a $13 monthly inactivity fee. Over time, it's going to whittle away at your balance, and that's what's kind of happening here. So with all that in mind, this could be it's a lottery ticket at this point. It's a lottery ticket where the odds are kind of in your favor as an investor, but a lottery ticket nonetheless. There's a lot that can go wrong. No guarantee it's going to be able to monetize any of those assets for anything close to that. So keep that in mind before you invest. I am on the sidelines with Seritage right now. I was a shareholder. It's a company I'm watching very closely. It looks like it could be a good value. But just remember, this is not a guaranteed 150% return by any means. There's a lot that can go wrong. I'd love to hear your thoughts. I'll do my best to answer any questions I get individually. Thanks for watching. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from the popular product Stock Advisor. Stock Advisor has beaten the market by nearly 5 times. So go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 767% as of July 5th, 2024, and are measured against the S&P 500 returns of 163% as of July 5th, 2024.